This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stockbox interview. Welcome to the Research Talks podcast here on Stockbox with Alan Green, and we're back in the virtual environment talking to each other, Alan, not looking at each other, gazing into each other's eyes like we were last week at the UK Investor Show, where we did the Research Talks live, which was pretty fun, wasn't it?
It was great. It was a really good show, and because I know, chatting to a couple of people there, they were saying, "God, it seems really quiet at the moment." I arrived about 10:30, I think, and then no, actually, just after 11. That was it. Everyone was saying it was really quiet, and then all of a sudden, there was a stand. Almost seemed to be a stampede, so everyone rushed in, and then from that point on, everyone, the stands were busy, lots of engagement with between companies and investors, which of course is what you want, and I think most importantly, there was a real sense that people were just glad to get out and meet people again in the way we used to do a few years back, because of course COVID has just changed habits and socializing fundamentally. It's actually great to sort of rediscover some of the old ways.
Indeed, yeah, indeed. And it was nice to see people in person again for the first time. Some people who we've not seen for a while, and even some people I've not even met, but spoken to or familiar with on the boards or on Twitter. So nice to meet people. And there's definitely, I think those events, I think COVID hasn't killed them. It's just temporarily suspended them, and I think they will come back strong.
Yeah, and I think also, some people, I think after COVID, probably won't ever go out and do that sort of stuff again. But of course, there are a lot of people that will. So yeah, I mean, I certainly spoke to a lot of people there, and met some people I hadn't seen for a few years, and it was great to meet up again. I'm sure there'll be more shows later on this year and next year that we can meet people again.
Indeed. Okay. Well, today you're going to be talking to us about Pembroke Resources and also sovereign metals as well.
Yes, indeed. Yeah. Okay. Pembroke Resources. We spoke about this company back in March, in fact, and of course it's a standard. It's listed on the standard list. Currently got a market capitalization of 4.35 million, and I think it's fair to say the share price has gone the way of a lot of companies in the sector over the past year. Of course, we've all eulogized about the woes in the sector and the fact that this malaise is dragging on for so long. But nonetheless, there's a very strong investment case for Pembridge, which is well worth examining. So shares are traded as high as 9.5p on the year. That's over the past fiscal year, and as low as 3.5p. Currently at 4.58p. And Pembridge is a mining investment company, which it has an 11.2% stake in the Minto Mine in Yukon, Canada. And of course, Yukon is renowned for a number of things. Of course, it has Mount Logan, Canada's highest peak. It has immense wealth in its almost limitless mineral resources. Was renowned for the Klondike Gold Rush, of course, several hundred years ago. But it's very sparsely populated with just 40,000 people. And as you would expect, mining is the leading industry in Yukon, representing 13% of the GDP in the region. So the Midtown Mine, it's a copper, gold, and silver mine. It's had approximately $350 million invested since construction began in 2006. It's located about 240 kilometers from the capital of Yukon, which is Whitehorse. It's been in continuous production since 2007, 2018. And Minto itself listed on the TSX in Q4 last year, raising 31 million. And as a part of that, Pembridge had previously provided a loan of 4.1 million Canadian dollars to the company, which is now starting to receive back. Indeed, the progress so far this year has shown that the cash has come in, and of course it's opening up a raft of new opportunities for Pembridge to invest into other sectors and into other companies. It received its first payment of 500,000 Canadian dollars on March the 11th, and has subsequently received its the second payment on March the 29th, in line with the payment time projections, and it's going to receive the full $4 million back from its loan in quarterly installments of $1 million during 2022, with a final interest payment in 2023. So that's a very that's going to bring an awful lot of cash into the company, which is going to redistribute accordingly. So in January, there was a strong trading update, Q4 operational update from the group, and indeed the chief executive of Pembridge, which of course is Gatti Al-Jabouri, who has many years of experience, over 30 years of experience in international operations and trading in natural resources. Gatti Al-Jabouri said the company is on a sound path to increase ore processing volumes and also deliver life of mine extension based on the exploration work that was taking place there at the time. At that juncture, an MPV8 number came in at around 307 million Canadian dollars. So there's a huge amount of resource in the ground still to be found. On January 17th, the company said it would be using the money that it gets back from its investment to invest into opportunities in the decarbonisation of the energy market, and set down a bunch of criteria, which included equity stakes above 10% with an internal rate of return of 12% and an MPV of at least $30 million. So the company's very clear on what it's setting out here. Then also March as well, we received some further updates from Minto. 22 holes were drilled, revealing some decent grades, noted as a strong start to the exploration program. And then on March the 29th, when the company received the second payment of $500,000, it announced it invested £25,000 sterling into Vulcan Green Copper as part of a £500,000 capital raise. Now, it's already provided Vulcan Green Copper with a £25,000 convertible loan, which has a 12% coupon. That will convert into stock at the next fundraising, or if Vulcan Green IPOs, which it could well do, then of course it will participate in the pre-IPO fundraising using that loan. So Vulcan Green Copper is it's invested into the Katumba copper project in Mumbwa, Zambia. Of course, this is in the famous Zambia copper belt. Many companies invest into there. Of course, we've spoken about Tertiary Minerals. Tertiary Minerals and Patrick Cullen are very much engaged in the Jacks copper project in the Zambia copper belt. So an awful lot of activity there. But Katumba already has a JORC resource estimate of 27.9 million tons at 2.2%, which equates to about 610,000 tons of copper. So there's an immediate payback from that straight away. Just back to Minto, on May the 17th, Sumitomo, the Japanese giant, extended its offtake agreement with Minto, where it agreed to purchase 100% of copper concentrate, extending by a further 4 years. And the company is also, Supermeter has also provided a debt facility to Minto of 17.5 million Canadian dollars, which is repayable over 14 months, but with good reason. Earlier this week, in fact, yesterday, we had an update from Pembridge on Minto's Q1 2022 production, and it's hit a record. Copper production of 9.1 million tons, up 70% from Q1 2021, at a cash cost of just $2.44 per pound. Revenues in the first quarter rose by 109% to $53.3 million. Net operating cash flow of $15 million, up 8 million from the 7 million in Q1 2021, and the group has reiterated its full year forecast. Indeed, Gatti Al-Jaburi commented on the Pembridge announcement, saying it's that Minto is showing very positive net assets, positive operating cash flow, and fully diluted earnings per share of 20 cents per share. So a very strong performance from the group. So the future is looking very bright for Pembridge, and I think we have, by the end of the year, the company will have bought in $4 million in the loan repayment from Minto, and clearly Minto is cashed up and well able to do that. So I would imagine on top of the Vulcan Green copper investment, we're going to see a few other selected mining investments taking place over the year. And of course, this is happening at an ideal time, really, for the industry. We've already talked about how the mining industry is in a malaise at the moment, and stock prices and the prices of companies are well undervalued, well underwater. So it's a very good opportunity, if you find a quality project, to be able to get in, negotiate hard, get a really good deal, and obviously get some uplift. And when you've got cash coming in like this, I think it puts Pembridge in a very strong position to do that. So, to my mind, it marks this out currently at 4.58p as an ideal entry point. Just also one other point as well. I'm not alone in my thinking there, because on March the 16th, UBS, the investment giant UBS, picked up stock and now holds 5.48% of the company.
UBS, okay. Well, that's a nice tick in the box, isn't it?
It certainly is. Yeah. That's a big tick in the box.
Yeah, good. Okay, excellent. Well, thank you for giving us that investment case. So, Sovereign Metals, the other company you want to talk about?
Yep, Sovereign Metals are a dual-listed company. I've spoken recently about them of course. So the company currently has a market capitalization of 243 million Australian dollars, which equates to about 120 million sterling ish. So it's on the ASX. It's listed as with the ticker SVM. It came to AIM late last year with the EPIC code SVML. And Sovereign Metals have the company asset is a giant rutile project in Malawi. Now, rutile has a multitude of applications. It basically is it's the mineral where or from which can be obtained titanium dioxide. Titanium dioxide is available in two forms: either ilmenite, where you can extract about 45%, or rutile, where you're literally extracting 95%. So rutile is basically 95% titanium dioxide. The applications are nebulous. It's used in the aerospace industry, steel and copper alloys. It's used in welding, so welding rods, and indeed has an arrangement or a memorandum of understanding with the welding and metals giant called Hascor, who have an initial agreement to supply 25,000 tons of rutile to the company, we have welding, and then of course in pigments as well. It's used in pigment in paint. So when you paint your ceiling or your windows a brilliant white, the brilliant white in that paint is titanium dioxide. So imagine how many paint manufacturers there are around the world. You get some idea of the scale of demand there, and it also has applications in porcelain and glass and colouring and other aspects too. So it's a very important critical mineral. Now the two the largest resources for rutile are, well, firstly we had the asset in Sierra Leone, which is Sierra Rutile, which of course has the Iluka asset. There is an asset in Kenya called the Kwale asset. The Iluka asset was previously one of the largest at 715 million tons, but then on April the 5th this year, a scoping study and a scoping study returned numbers which confirmed Cassia, which is the name of the asset in Malawi. It confirmed Cassia as the largest rutile project in the world at 1.8 billion tons, which tripled its previous mineral resource estimate. Also with that is a flake graphite byproduct, which currently is at 23 million tons flake graphite. So that's a fairly considerable side asset with the group as well. But of course, with this resource, the company is working fast to update and develop a scoping study, and it's also interesting to note that on May the 3rd, the company raised 15 million Australian dollars in an institutional placing with UK, US, and European institutional investors. It was cornerstoned by Thematica Future Mobility, which is a very green European fund. And Thematica have said that they like the low carbon footprint rutile asset that's being developed, and also the low carbon footprint graphite, and the group's not inconsiderable ESG credentials. Yesterday, the company announced that it had further advanced its ESG initiatives in Malawi. So it's investing in a community centre in the region, also extra water bores. And of course, the company will continue to do this. It also is employing a large amount of the local workforce to develop the assets. So there's a real sense of that this asset's going to make a huge difference to the region, both in terms of prosperity, in terms of health, in terms of education, and it's good to see something that with this low carbon footprint that's going to do so much for the community there. So this was originally identified by Dr. Julian Stevens. He's been working in the region for a number of years, and I heard about this project several years ago. And then, of course, we started working with the company early this year, and just realised the potential of the group. And indeed, it was featured on Bloomberg yesterday as well. Rick Rule, who is quite well known across Canadian, or certainly in the Canadian mining market, featured Sovereign and the 1.8 billion ton Cassia rutile project as a key find for investors. Realizing, rutile, I think it's one of these assets that has nebulous huge number of applications, but it's hard to actually realize just how important it is until you actually look at the applications that it has, particularly, as I say, with paint and aerospace, and also clean tech as well. The paints are used on the wind turbines, so the ones that are out to sea, of course, take a real battering from the weather, and those are painted with titanium dioxide based paints as well. So you get some idea of the importance of the rutile going forward. So the company currently in the UK, as I say, 243 million Australian dollars. Shares are currently trading at 29.25p. They've traded as low as 22p on the year. After the news where the asset tripled in size, Cassia, it tripled in size with 1.8 billion tons of rutile. The shares shot up, as you'd imagine, to 48p. But again, they've drifted back. They're still well off the year lows, but nonetheless, I think the importance of this asset and the pace at which it's going to be developed is going to be key going forward. So we all look for ideal entry points to get into an asset and buy into a company. And I think, having taken the steps it's taken now, it's unlikely that the shares are going to be at this level for much longer.
Okay, excellent, good. Well, thank you very much, Alan, for that. That's very interesting proposition there. I think unusual as well, but
yeah. Well, I think also with the fact that there's 23 million tons of graphite or flake graphite there too, which of course once you set an infrastructure up to get the stuff out of the ground, and there's more than one product, then of course you're opening up into new markets too, which is key for the group.
Yeah. Okay. Good. Well, thank you very much, Alan, for talking to us there about Pembridge and sovereign metals. And we'll catch up again in a week's time. I believe there's some holidays coming up. We'll have to rejig how we record, but we'll still get the Research Talks podcast out on a Sunday evening as planned. But it is that time of year when people are starting to go on holiday, and I believe you're going to do a bit of a bike tour. Your bike's coming out, so that's good to hear as well. So,
yes, we've got a trip planned around Wales in a couple of weeks. We were going to do a European trip, but I think when we planned it late last year, it was I think there's still uncertainty over COVID and as to where travel, or whether we'd be able to travel or not. But so we played safe and stuck with the UK. But Wales is lovely. Looking forward to going there.
Excellent. Well, thanks very much, Alan, and we'll catch up again later.
Thank you, Mark.
If you enjoyed this interview, then give us a thumbs up, a like or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programmes at stopboxmedia.com. Thank you for watching.